It's a good day of trade again today. 0.5% up when it comes to SenSex as well as Nifty. But it's the banks which are really taking the charge. In fact, Bank Nifty is the one which is outperforming the key indices today. And mid-caps are also not too far behind. In fact, the key contributor today is coming in from the large bank pocket. And it is the HDFC Bank and others like ICICI Bank as well as Kotak Mahindra Bank and even SBI are really performing well. Mangla.
Absolutely, but from the mid-cap end of things, a lot of them looking too good. We have PC Jewelers. That's been very, very volatile. And that stock has suddenly moved higher to about 10% as we speak. Majority of the gains coming by just in the last 10 odd minutes. In fact, 12% now as we speak. Maybe perhaps given the sort of price movement on this stock over the last few months, there could be some shorts also in the system and could trigger some further short covering on PC Jewelers. As far as banks are concerned, you spoke about some banks, but the non-banking finance companies, they're doing fairly well. So we have Bajaj Finserv, which is topping the Nifty charts in terms of moving to the high point of trade. Along with that, we have other couple of stocks doing fairly well too. GAIL has moved to the high point of the day along with Infosys. So let's see where we go. We're exactly where we are on the Nifty, where we open 10,810. But it's the PSU banks which are in focus. PSU banks under the prompt corrective action trade in the green on hopes that the new RBI governor could provide some relief, give a longer rope to the PCA framework. Abhishek joins in with some detailed analysis. Abhishek.
Well, Manglam, as you mentioned, there is a belief in street that, the PCA framework can be relaxed by the new governor that has come in at the helm. So such relaxation actually can make the bank improve on its lending front and improve the profitability. Currently, we have 11 banks under prompt corrective action, which form about 20% of the entire banking sector credit book. The gross NPA in absolute value formed by these banks are 35% of the total gross NPA of the system, which is close to 10 lakh crore. Out of the PCA banks, if you look at the capital levels, banks with double digit or better capitalized are Corporation Bank, Bank of India, Oriental Bank of Commerce and Dena Bank. The worst capitalized banks are Allahabad and IDBI Bank. In fact, IDBI Bank's common equity tier 1 ratio is well below the 4% mark and the worst in the history of Indian banking. Other details on PCA banks are that the banks with lower net NPAs, wherein they can immediately come out of the PCA framework, are Bank of India, Allahabad Bank and Oriental Bank of Commerce. PCA banks have reported a net loss of 10,200 crore in the previous quarter, so they form about 69% of the net PSU bank's net loss. The PCA banks, however, loan growth has been tepid in single digits, growing both YOY and quarter on quarter. So two banks which are on the verge of coming out of PCA framework may be Bank of India and Oriental Bank of Commerce, as they are well capitalized along with lower net NPA.
All right, and more coming in from the financial services. Stay on with us, Abhishek. So NBFCs, that pocket also continues to rally in trade. In fact, take a look at, DHFL, which has been rallying over 5% already in trade today. Now, Edelweiss, remember, recently came out with a note on the sector, and Abhishek will give us more details on what really it means. So, Abhishek, what does the note say? And does it also mean that the overall crisis that we had seen of NBFC has lifted off?
The liquidity crunch which actually came into NBFC sector in the last week or last fortnight of September has been dealt with, and there is no major hiccups that have been seen amongst the NBFCs. So in fact, the commercial paper market activity is panning out to be better than what was anticipated. So as per Edelweiss, in November, there was about 1.6 lakh crore of commercial paper coming up for maturity. So out of that, 80% has been rolled over or refinanced, which is a very good sign. However, on the negative side, Edelweiss mentions that the NBFC crunch actually is reflecting on real estate sector. Remember that the commercial real estate sector, 60% of it is financed by the NBFCs. So bond yields also have cooled off right from 8.2. They have come down to less than 7.4% today. What this means is that the cost of funds for NBFCs have started reducing. So valuation, if you see, many NBFCs are off 30-50% from their highs that they saw this year, which makes it attractive, is what analysts on street believe. Back to you.
All right, Abhishek, thanks a lot for that. In fact, on that note, let's also listen into what Rashesh Shah, the president of the FICCI, and Sridhar Sivram of Inam Holdings had to say on this very space. Listen in.
I don't think there is a line of credit required. The liquidity crunch that was there last 8-9 weeks, that has passed. But I think what maybe should be on the agenda is the long-term framework for NBFCs. NBFCs have now become almost a third of the incremental credit. They are 20-25% of the existing credit. So we need a framework, and there are all kinds of NBFCs, different kind of housing finance companies. So we need a framework, we need a governing framework, we need an approach paper, and I hope that RBI deliberates on this and how to formalize the framework of NBFC even further than what they have done up till now.
There is a crunch as far as liquidity is concerned. The rates have gone up. The securitization rates have gone up by 200 to 300 basis points. Nobody will come and say on the channel, but when you actually go and meet these NBFCs, so they are having significant issues on liability side. We will see the impact of that when we see the third quarter results. So there is an issue. So I really don't I'm not in RBI's camp that there is no issue. There is an issue, but I hope that the issues are resolved along with some sort of AQR.
All right, so those were the important comments, really, opinions really coming in. But one stock which is going to be in news today is Yes Bank, and that's in focus ahead of the crucial board meeting which is underway currently. Now, the board is expected to approve a new chairman. And remember, Yes Bank's MD and CEO Rana Kapoor's tenure ends on 31st of January 2019. Our colleague Ritu Singh has been tracking it very, very closely and joins in with all the details. So Ritu, tell us, what are you picking up from your sources? What's expected to come from the board meet?
That's right. Yes Bank is in a damage control mode, and the board will be meeting today to take stock of the vacancies in its top leadership. This is going to be a very crucial meeting where the board will name a new independent director and also evaluate a new non-executive chairman for the board for approval by the Reserve Bank of India after Ashok Chawla resigned from the bank just last month. Remember, 2 directors have been appointed by the bank so far to replace Ashok Chawla and Vasant Gujrati, who had also resigned from the board recently. And the bank is now looking at shortlisting one more independent director with expertise in the field of information technology and cybersecurity to replace R. Chandrasekhar, who also resigned from the board in the month of November. Now, as far as the post of chairman is concerned, Nandan Nilekani's name has been doing the rounds, but so far the bank has not confirmed this information to CNBC TV 18. Also on the agenda in today's meeting is a review of the search committee's progress in the selection of candidates for the post of MD and CEO to take over from Rana Kapoor when he vacates office by the end of January next year. And as we had reported earlier, the search and selection committee meeting did take place yesterday to discuss the final shortlist for a new MD and CEO appointment, which will now have to be ratified by the board of Yes Bank, and then it will be sent to the RBI for the final nod.